Hello and welcome to this week's special presentation. My name is Jim Penna, Manager of Retirement Services here at VectorVest, and I'm very happy to be providing this week's topic, which is titled, Do You Have Enough Money to Retire? And this week's topic is based on an article Dr. DiLiddo had shared with me, and it begged the question, do you have enough money to retire? The article was titled Reality Check. Here's what the average retiree spends every month. It was an article in MarketWatch written just a couple of days back, and it had some important statistics, and one that stuck out was households run by someone 65 and older spend an average of over $45,000 a year, or roughly $3,800 a month. Now, those numbers come from the Bureau of Labor Statistics, and it was at the end of 2016. Those are the most recent statistics. And they even broke down spending by category, again, for the average household run by someone older than 65 years old. Now, it's important to be able to go out and calculate those numbers and estimate the amount of money you'll need. If you simply go into Google and type in retirement calculator, you'll get, just about 150 million different results. So you can come in here and you're able to punch in the numbers that are pertinent to you and be able to know and estimate your retirement. But again, we have to determine, or you have to determine, what is a secure or safe retirement for you. And the answer, we believe, is a secure retirement is one in which you have enough income to live the lifestyle that you desire. Or put another way, where work is optional and retirement is affordable. A very important statement that's put out by the Social Security Administration says that Social Security is the largest source of income for most elderly Americans today. But Social Security was never intended to be your only source of income when you retire. You also will need other savings, investments, pensions, or retirement accounts to make sure you have enough money to live comfortably when you retire. And it's that concept that Dr. DiLiddo and I have had many conversations about customers who often ask, how do I keep from running out of money in retirement? Well, the most logical and pragmatic answer I've heard was from Dr. DiLiddo when he said, just tell them to keep making more money. And so that's what I want to do here, focusing on the three core strategies that every retiree must take into account when building and managing their retirement portfolio. It begins with capital appreciation. Then we have income from dividends and selling covered calls as a steady flow of income. And then finally, and maybe most importantly, is the ability and understanding of how to place that strategic protective put option in an uncertain market. It all begins with relative safety. In the VectorVest program, relative safety is an indicator of risk. Consistency and predictability of financial performance are the primary factors in assessing relative safety. And just about a year ago, I did a special presentation called How I Fell in Love with High Relative Safety Stocks. I urge you to take a look at that as well. In that presentation, I talked about when we fill a portfolio of high relative safety stocks, these are the type of stocks and performance that we often see. And understand it's not a coincidence that as earnings per share rises, so too does the price of the underlying company. Now in this case, HEICO Corp, or HEI, has a relative safety number of 1.44, which is excellent in the VectorVest program. After we've built our capital appreciation portfolio, we focus on income, again, from both dividends and from the ability to sell covered calls and generate that steady income as well. Now, when we're building a dividend portfolio, what we call the blue chip dividend payers, stocks like AOS come up, and this is just a 5-year look back. AOS is what's called the dividend aristocrat, or a company that has not only paid, but grown their dividend over the last 25 years or longer. And so just this 5-year look back gives us that staircase of growing dividend payments with a company whose price is growing, and oh, by the way, earnings per share is still growing as well. And so none of these are coincidences that these type of stocks can find their way into your portfolio and have this type of performance. In fact, when we fill that blue chip dividend payers portfolio up with stocks like that, we've got over a 5-year span 74% return, and that does not include the $23,400 in dividend payouts as of May 29th of this year. And so this dividend portfolio has nearly doubled over the last 5 years. A very prudent, very lightly traded portfolio where you can generate here both capital appreciation and that steady dividend payout. And finally, there is the all-important capital preservation portion of managing your portfolio. From here, I'm going to go into the program and let's take a look at some examples of how you can easily use the VectorVest program to begin to build and manage your portfolio. I'll start with the Unisearch tab and simply take us over to the search directory where I can scroll down and find the folder listed that says Searches Retirement. And I don't have to go much further than here. There are 4 searches in here I'll use without having to take too much time to find them. They're all right here in this folder, and I'm going to start with worry-free winners. Worry-free winners is a concept that we use to find stocks that have the very highest relative safety numbers, and we sort the list of stocks with the highest RS coming to the top. We want the stock to be a buy-rated stock. We also want it to pay a dividend. We want the best of both worlds here, capital appreciation and dividend payout. So the stock has to pay a dividend, and we use a price parameter of less than $100. You can grow that higher or lower depending on the size of your portfolio. It doesn't matter. We use the $100,000 portfolio, 10,000 into each position. We want to be able to buy at least 100 shares so that we can go out and sell covered calls, again, to generate income or as a defensive measure. So a great search, when we run that search, the type of stocks that come to the top of the list are pretty impressive. And we can see, if I just scroll over a bit, the high relative safety numbers and then the high comfort index numbers as well. Comfort index is the price growth persistence of the company. And those nice, steady lower left to upper right-hand graph patterns are what we see with the high CI stocks. So what I'd like you to be able to do is, I just returned the top 10. I'm going to go ahead and click on the top stock. I'm going to hold my shift key down, and I'm going to choose the bottom stock and highlight all of those companies. Now my goal here is to build a master watch list using just 3 or 4 searches and have a very powerful roster of stocks to choose from. So all I have to do once I've highlighted them, right click and go to the menu item that says Add to Watch List. Here there's a folder called My Watch Lists. I'll simply click New up at the top and we'll call it My RS Watch List, we'll call it. And you can name that whatever you'd like and put in any details or comments that you choose to. I'll hit Add. Now the watch list exists. I simply click OK, and the 10 stocks from Worry-Free Winners is now in that watch list. Vector plus Vector 1.25, another very powerful search. It has stocks sorted by VST plus YSG. That's our yield, safety, and growth vector for dividends. Each stock that appears also has to have a relative safety greater than or equal to 1.25. I'll take the top 10 stocks and I'll simply go ahead and again tag the top one, hold the shift key down, right click, and let's add them to a watch list. The system knows what watch list we're in. It will go ahead and add those stocks as well. I'm going to do the same thing with Premier Growth stocks. Another great search with relative timing and CI in the sort. Large cap companies with great both fundamental and technical performance. So we'll go ahead and choose Add to Watch List. We'll add those as well. And then finally, I'm going to go to the Long-Term Winners RS Descending. This is simply taking our database for the most part and sorting it with the very highest relative safety stocks coming to the top. And as I often say about high RS stocks, what happens is when we have these kind of numbers for relative safety, all of the other numbers that concern us all seem to fall into place, like relative value, which is the price appreciation potential. The comfort index, again, which is that price growth persistence or that steady movement of the stock price, the ability to withstand lengthy or severe downturns. Things like earnings growth rates and dividend safety and growth rates for those stocks that do pay a dividend. So very strong search long-term winners, and we'll go ahead and tag those and put those into our watch list as well. So once I've done that, I simply go to the Viewers tab. And from the Viewers tab, it takes me right into the watch list that I just created. Now, there are 34 companies in that watch list. Remember, we took the top 10 out of 4 different searches. So we had 6 stocks that were overlapped in those searches. That's why we end up with 34 stocks. But the key here is to look down at the watch list average. And that roster of stocks that we just created has an amazing average number for all of the important factors that we care about here, and it's relative value. Average of 1.32. RS, the average relative safety, is 1.39. You see the RT numbers. The CI average at 1.52. That's exceptional. Earnings growth rate, 21%. And so these are the type of stocks that we're talking about when we're looking to build our retirement portfolio. A great way to build, again, what we call that master watch list, so that you can come in and pick through these stocks and build that portfolio with the companies that suit you. An important piece of that is making sure we stay diversified. So if you were to scroll over all the way to the right, you have the ability to see the industry and sector, and we want to make sure we're not overweighted in our portfolio. So you have the ability to kind of cherry pick through and make sure that you're diversified as well. Next, I'm going to go back to the Unisearch tab. So that's our capital appreciation portion. If I look at the blue chip dividend payer search here in the retirement folder, when we look to build that dividend growth portfolio, we begin here and we've got a search that's sorted by the earnings growth rate times the dividend growth rate. We simply are taking stocks from the Dow Industrials, Transports, Utilities, and the S&P 500. They have to have a yield of at least 3%. And they've got to be on the watch list we call DRIP 10 to 24 and the DRIP 25 plus. That stands for the dividend reinvestment plans. So all of the companies here have those reinvestment plans, and they've all grown their dividends from anywhere to 10 to 24 years or 25 or more. And then finally, the dividend safety number has to be greater than or equal to 50. And what we find on this search when we're looking to build the income portion of our portfolio is when I scroll over the numbers that are important here when we're looking at dividend stocks. First of all, large mature companies, that familiar companies that have been around a long time, have the free cash flow to be able to continue to grow and pay their dividends. So we're looking at earnings growth rates all in double digits here. We're looking at the dividend safety numbers all above 50, and the importance of that number is found here when we compare earnings yield to dividend yield or just earnings per share to dividend. And the reason we compare these is to make sure that that payout ratio is favorable. We don't want a dividend paying stock to have a larger dividend yield or pay out more in dividends than they earn, because it's only logical that if they run into any headwinds, they may not be able to continue to pay that dividend. And we know there's no greater black eye for a company than to have to either cut or eliminate dividends because earnings isn't doing what it's supposed to. So those yields greater than the dividend yield is what we want to see, so that payout ratio is favorable. And again, dividend safety is going to be the number that ensures that for us. So if I go into the Portfolios tab, we have some models here that I can share with you. We have our blue chip dividend payer using that search. We've got a search that's up over 74% since its inception. This is a 5-year look, began in January of 2013, so about 5.5 years now. That is just the capital appreciation. Again, that doesn't include the nearly $24,000 in dividends that have been paid out. So this portfolio has virtually doubled in the last 5 years. We also have, from the worry-free winner search I showed earlier, a trading plan that has returned 93.5% over that same time frame back in 2013. And again, that number also does not include dividends being paid or reinvested. And it also doesn't include any added premium that you might receive by selling covered calls, again, at the strategically placed time during market trends or the movement of the stock. You can generate more income by selling covered calls against these stocks as well. And remember, they all pay a dividend, and that's why we call it the best of both worlds. We've got dividend payouts, and we've got some good recognizable quality high RS stocks in the portfolio. We even have our income portfolio. This just began late March, so about 2.5 months ago, and we're up over 8% doing one buy right or covered call trade per week. And so that portfolio is working out pretty well. Also, again, another way to generate income on top of the dividend portfolio, simply doing the buy right or selling a covered call simultaneously with the purchase of the underlying company and generating a nice income on a weekly basis. Finally, we have a retirement growth portfolio I'd like to share with you as well. This trading plan is up over 536% over the last 10 years. We went 10 years back here, and even during 2008 and 9, the worst this portfolio performed is that it went down somewhere in early 2009, down $223, or 0.22%. It did have a big drawdown in early 2008. It was high, but your initial investment never went lower than minus $233 during the worst stages of the 2008-2009 crisis. So pretty amazing numbers there. And as I go back, I can share with you that you can learn more about that retirement growth portfolio and the trading strategy behind it by joining us for a new course. The Ultimate Retirement Solution course is going to be held. The seminar will be held here in our training center in Cornelius, North Carolina on June 22nd and 23rd, 2018. We're going to live stream that here so you can enjoy that from the comfort of your home or office. And during that seminar, we're going to go through the 3 keys to building a strong retirement portfolio. And as I talked about that retirement income portfolio, we have a longer term look. This is a 3.5-year look. Just again, doing that 1 trade a week, the buy right. We've had 83% winning trades, up over 18.5% annualized rate of return. And then finally, that retirement growth portfolio. This trading plan has done really well over 3- and 5-year lookbacks as well. And again, this is the 10-year look at that trading plan. In fact, we incorporated this plan back on the confirmed up of April 17th of this year, just 7 weeks ago. And we're up over 16% in that time frame, just over the past 7 weeks in that trading plan. So again, the new course will go into greater detail there. It's a great seminar to help you, again, build and manage your retirement portfolio so that if there's any question about, do I have enough money to retire? How am I not going to run out of money during retirement? We're going to address those questions in great detail during the seminar. You can sign up for the seminar from the home page. If you've got the events tab open, you can simply click there. Or if you have the special offers tab, order now here. Or just go into the views section on Friday night and it'll be listed there as well. So we hope to see you there. In the meantime, if there's anything we can do to be of assistance, please don't hesitate to call 888-658-7638.